Hello traders, good weekend, good Sunday to all. How are you today? Vladimir here, and this is the weekly forecast for 17th of July 2016. I would like to start with prayers for all who this or other way were involved on the last weekend events, terrible events in France and then in Turkey. My prayers are with everyone from there. I hope you guys are good. I hope yours are safe, and I just pray for safer day, better days for everyone, because this reality is really bad and very sad, and I really hope that the human nature and human wish for best world, for better world for everyone and for better lives would lead our lives as well. So my prayers for a safe world and for health for everyone who suffered this or other way on the events. And let's go back to the charts. We have to continue our lives. We have to continue work hard. We have to continue do what we love to do, and never let anyone who wants to take it out of us the privilege to feel the win. So last weekend Forex was pretty serious, finished series. The week itself was mainly around the yen pairs that had some action, but the end was belonged to the dollar mainly as the main safeguard, especially on the last 1 hour. With everything that started to happen in Turkey, we saw dramatic drops in the euro, in the dollar yen in the markets, if it's the New Zealandian dollar Canadian, which made a fly again, and that all was really pretty crazy. This week might start with gaps, this or other way. Still not convinced, of course, what is going to happen exactly. So we will need just to wait and see how the week starts. But on the longer run, we play the same ideas as we did set them at the beginning of the week. So that's our idea, to put the levels, okay, to create trading zone for ourselves, and to see how the price act around the zones which we will want to act at, right? Last week we called the top for the New Zealandian pairs. If you remember, guys, we've been talking about the statistics, right? Now this statistical top, remember the New Zealandian dollar, we said everything on 10, 11, 14, right? And we got this top right at the beginning of the week. Now the beginning of the week was tricky because that's how it all started, right here. One more top, drop, another attempt for a top which failed, and boom, we all saw what happened right after that. So the New Zealandian dollar, the New Zealandian Canadian, which we have been calling as well for a top, actually New Zealand won on 14 and happened to be on 13, so 1 day before, right? That's the date. And we got a very beautiful drop down. So the New Zealand pairs really were good with us, especially in terms of statistics. We will talk today and see what other pairs, what they could lead for us. So let's start with basically technical views, and we will add statistical part at the end. Let's talk about the actions. So New Zealand dollar. First of all, what's with this pair? We have been talking a lot about the possible triple cycle movement, right? Which ended up with the bearish divergence. We got a false break, one here and one here. So what's the scenarios we could face right now. One of the scenarios is that we are in a range right now, because we did have two false breaks in a row. One of there are two scenarios after such thing happen. One, we are for correction. Two, we are in a range. Correction could be double wave, correction could be ranging. So that's pretty much what is going on, as long as this top holds, of course. So we are aiming basically to the bottom, which is here, approximately 0.60, anywhere between 0.69 to 0.70. Now that could be, as I said, as a range, something like that, before we will be able to decide what's coming next. Or it will be in two waves to the downside. So that could be also something like 1, 2, and 3. Okay, back to this trend line approximately, or something like that, back to 0.67 area. Why 0.67? Because if this is triple cycle, then we will be aiming the 50 of it as a target. That's why 0.67 is the approximate zone. So to make long story short, sell rallies as long as the last top hold makes sense. Okay, so we are on a 1 hour chart. Here or lower, we should get a correction to the upside, anywhere in between 0.71 50.60 up to 0.72 50.60, which from, I believe, we will be dealing with a reversal area. This is pretty much how I believe it should go for two waves down. So sell rallies is the plan yet, as long as the last stop holds, but don't just jump in, wait for good levels. Good levels means two waves up or three waves up, ending up by false breaks. False break could be horizontal, false break could be trendline false breakouts. Put Fibonacci levels also, which of course make a lot of help when it comes to reversals, right? Put support resistances, which of course help a lot when it comes to trading, and we can mark the levels here. You can see how many important supports and resistances we have, right? That's pretty much on the levels I have mentioned. So once we are there, look for the bearish divergence, false breaks, and jump in. It's all about risk reward. Okay, so once again, our zone of action starts right here, approximately 0.71 50.60, maybe even slightly higher, with this resistance zone, and it goes through these areas. Here we will be waiting for action to take place. That's New Zealand dollar. New Zealand and Canadian, that's pretty much the same. It did move down. I just want to remind you, we had this trend line, right? We have a kind of kicker right now on the beginning of this week. We had a beautiful false break. We're dropping down. There is pretty serious chance we will see this line earned back. So that could make something like that, which after there is not a bad chance we will be dealing with buys. Keep an eye for potential bullish hidden divergence to be created between this bottom and the bottom to be created right here somewhere. Now, as long as the last stop, and I know it's pretty far, but as long as the last stop is holding for us in a short term, we should face rallies probably. So we are looking on the 1 hour chart cycle. What can we see? We have a kind of a special cycle opportunity, right? We have 1, 2, and this actually looked like potential 3, which turned to be longer. So it actually goes like this. We have 1, we have this 2, which is duplicated, and we have right now potential triangle or a range, which very likely would make a one more push down before the reversals takes place. So we already have one false break. So let's mark it because we have to get ready for potential action, right? We have this false break right here. Ideally, we should get one more false break. If we do, we can start to look for the buys. If we take a look on the divergences, we have one low, right? 2, 3, and we might get here 2, this is 3. One more low would give us 4. 4 continuing lows on a continuing divergence, this is a very, very powerful reversal sign. Of course, not only for bottoms or bottoms, but also for tops, and not just for tops, also for bottoms, of course. Right? 4 in a row, very, very, very strong thing to go with. So one more false break and we can start to talk about longs, and then on lower time frames we can easily start to look. Let's say this is our bottom, right? If we can get it this way, right, then we can go and start to look for momentumal change by creating higher highs, higher lows, and look for the reversal to try and to ride this reversal. If we can get this scenario, we would be aiming to in between 38 to 50 of this rally. There, in other words, 093.20 approximately, 93, let's say 093 plus, because we have a monster resistance here, up to the next important area, which is in between 50 to 61. But so 093 zone up to 093.70, 094. This is our zone of action. Okay, so we would be aiming to go back to here, up to here. This is our area. And by ideal, we are talking about mirroring. So this is how it should look like. Mirroring means the candles it took to make the drop. It's pretty much the candles it will take to complete the correction by reaching the desired zone. That's what it means. Okay. That's for New Zealand and Canadian. Now we can talk about more and more and more New Zealandian pairs. For pound Kiwi, you know my view, friends. You know I want one more low before we start really go for it. But on the short term, there is not a bad chance that the pair already creating one leg up. So it could make something like that. 1, 2, we might get 3. Correction and one more before it creates the reversal to the downside. There is still a gap to close, which was not closed right here. That's doable. That's approximately 193. So can we go and buy actually dips? The answer is yeah, we can. Right? Which brings me to the pound, and let's talk about possible zone of actions for the pound. Pound had a very good week, and there are reasons for that. Reason number 1. We have a new prime minister. How good is that? I mean, for a country that's new energies, right? New expectations, new goal. Everything looks like wow. Things start to go fine. And then we have Mr. Carney, who did not take any action. That's what boosted up the pound, right? By Friday, actually. And then we had one of the Bank of England members mentioning that the next meeting on August has to be much more aggressive, and the pound, boom, crashed. So the question is, what's going to happen with this pair? Now, to answer that, we need to remember 2 things. 1, we very likely did not have yet all-time bottom. Very likely. And there is one reason for that. There is no divergence yet on the weekly chart, on the monthly chart, and on the daily chart. There is none. So very likely later or sooner we should have lower area. That could be 125, that could be 120, it could be even 115 or lower. No one knows. And there is no need to guess. But on the short term, there is not bad chance at all that we have now head and shoulders pattern. Flat shoulder, head, and maybe another flat shoulder. Call it head and shoulders, call it, I don't know what else to name it. Call it a bull, call it what a cup and hand, cup and hand, cup of coffee, whatever it wants. Seriously, whatever your imagination allows you, call it. The idea is that this bottom holds, and there is not a big chance that this support will try to hold as well. Plus, there is a very good area here to create bullish hidden divergence, right, between the bottoms two be created. Maybe also stochastic would help us, right? Now this is really good opportunity technically, which of course make another sense, because after vertical moves which means it's like straight drop or fly, right? And after such things, normally market tends to create several waves before it makes one more wave down. Again, it's not 100% true, it's normally like that before continuation. So for us, go and try to make buys makes sense. Okay, and the question will be where from. Now we have a trend line going through these bottoms. If we can get 130 area, this is also a monster support. See that, guys? That's 130 area. But we should pay attention to anything in between this area, which is 131 plus, down to and through 130.50, okay, and the 130 here. That's the zone of actions we would like to see. And we are creating here kind of potential 5-wave movement. We need this divergence take place, and we can try the longs again. Okay, if of course we can get the reversals. If we don't, and with all the last events going around the world, very unfortunate event, but the pressure is on, and that could bring the pound for new bottoms. Currently, my point of view, this is the area for possible reversals for one more high. But first of all, before we talk about one more high, let's talk about some reasonable first target, and that would be the 50% of this movement from the last top to the last bottom. 50%, somewhere like here. That would be very reasonable target. Okay, and at first stage. Then of course, let's try to ride up to where? 137 plus to close the gap, and maybe even a bit higher, next to 139, 140. Okay, that's where's the view here. Now let's move on to the euro dollar. Euro dollar so far does what we expected it to do, continuing lower. The question is it over? And again, there is no certain answer for that, because technically we could expect triple cycle. Pretty easy and pretty beautiful, because we had triple to the upside. So that's really looking good. Plus it's going to mirror it, right? So we cannot complain, and if the euro continues to go, fine. But we do have to be aware of the potential divergence to form. Okay? On a weekly chart, this could turn to be a bullish hidden. On daily, bullish continuing. The combination could be really powerful, continuing or regular, of course. It could work to the both sides. It would be the basic, and that would be a really good combination. So for the euro dollar, let's put the lines here. Okay, we have levels below 110, and we have 108.50 approximately, and then our next area is 107. That's the levels we will have to pay attention to. Now keep in mind, the bottom trend line will meet us around 107. Okay, so right on there, on that areas, once we create the divergences we talked about, bullish hidden on the weekly, and the combination of regular basic type on daily, that could turn to be really good opportunity for a buy. Okay, so keep an eye on that, guys. That's really important zones to follow. Now let's continue. We have the euro pound. From my point of view, this pair did not create all-time high. I believe there is more to go, but by ideal I would like to have one more drop down. Okay, down to where? Down to close the gap, 081 plus. That's the zone which I want to get. Now we did have one drop down here, okay, on this wave, And it does look like a possible triangle here. If we get it, one more bottom would be ideal to go and to buy. Now keep an eye here, guys, because daily chart still does not have bullish hidden. Therefore, chance to get lower is pretty big. 4-hour chart had this divergence, but it was not supported by anything on the daily chart yet. I mean, just the daily 20 MA, and that's exactly why we had the bounce which we expected here during the last days of the last week. But basically and ideally we should get this one more bottom, and that should happen in below 082. Ideally to close the gap, that would be a really good one. Then we would be looking for divergences to complete, okay, here to create false breaks, ideally to happen, and then boom, we will be looking to build up our buy positions potentially. Keep an eye, but by the way, does it mean we can short it? The answer is of course yes. We have this trend line, we have this trend line, okay, so for they are respected, and as long as this zone holds, sell rallies was and remain possible thing to do. So on the 1-hour chart, if we can get one more rally for a false break, ideal. Okay, so that's what we're looking for. Then we can go for sell. We have this. If we can get this false break, we can go for sells, build positions. If not, the alternative for us, trendline breakout. Last trendline we have on the rally is right here. If we manage to break below, retest it, we're going to try to build up this position. Okay, remember guys, this is all about risk versus the reward. If you can get a good reward versus your risk you plan to take, you are good to go. All right, that's the idea here, and we are aiming 081 plus area. Now, possible zone of actions, of course, last support. We need to go to break through to gain momentum to the downside. Then we have this area on the gap right here. Okay, next on the list is going to be Aussie dollar, before we switch to some crosses and the yen pairs. Okay, Aussie dollar. Now this one is a bit of mystery. Here is why. Because technically there is a room to 080 plus, and I believe on longer run that's where we are going. But on the short term, there is pretty serious chance that we are after something like that right now. Okay, that's pretty serious chance. Now we do have divergence. We did have one false break. We did have second false break. We did have a monster kicker and engulfing on last Friday. Perfecto. That's what it is about. Perfecto. Now watching on a 4-hour chart, we also broke this last trend line right here. Really good thing to go with, right? And on the 1-hour chart, we created bearish convergence, which was paid off by this reversal. So looking on a 1-hour chart, we got paid. And on a 4-hour chart, we got a break. We want to get a break below this bottom to gain a convergence on the 4-hour chart as well. And on a 1-hour chart, that's pretty much what we will want to follow. This is first opportunity. Okay, we want something like that to happen. Okay, we want to go below this bottom. Right, I hope I saw the number correct. Yes, 07520. That's the sound. Okay, we need to break here. This support. That's our zone of action. Okay, that's what we want to get. 1, 2, 3. We will probably get some divergence here, which should do something like that. So let this first leg complete, sell rally. Once we reach this bottom right here approximately and the bullish divergence created, our zone of action for sell would be right here. That's our range. Okay, that's where we will want to get the sell opportunities taking place. Okay, so Eyes on this one, guys. Very good, very interesting opportunity. And the cross and between Aussie to the Kiwi, of course. Weekly chart, monster engulfing. In other words, by retraces. We had this special cycle, which we covered from all the angles during the last weeks. You probably got annoyed by listening that from me. Technically, this pair is ready for higher areas. We can mark the Fibonacci by 50. We should go to 0108 area. This is a very powerful one, and I believe that's where we are going. On longer view, this head and shoulders pattern is still on. We might get it to 113 and maybe even higher. On the 4-hour chart and the 1-hour chart, actually, we should get correction before we jump in a buy. For those who have the buy, keep it going, guys. No change. This is a trend line. We can get 2 waves and get the continuation. 2 waves down, bullish divergence. Go for a buy. Zone of action for the buyers below 105.90, 85 even. Down to the trend line. That should be very, very good zone of action. Okay, with all the supports coming on by the end. Keep an eye there. Yen pairs, well, a bit of mystery. Last week we got a really serious rallies. The expectations from the Bank of Japan to take action are so high, so serious, that they might even not have a chance. So they are expected to take an action shortly. They were checking the opportunity to intervene in the Forex foreign exchange market by themselves without making any partnership work between themselves and the other central banks. So the question is, what is coming next? Now, fundamentally, the yen pairs also go with the good environment on the markets. This week, all the eyes, if last week it was to the pound with the new prime minister on Wednesday, and then the speech from Carney and the decision about the rates and the quantitative easings from the Bank of England, then this week we are going to Mr. Draghi once again. Okay, Draghi will have his board on Thursday. By expectation, no cut. But in reality, Draghi understands that later or sooner he will have probably to intervene more aggressive. The European financial situation is not good at all. So the market will be waiting for that. And remember, guys, if the line of lack of activity and interventions from the leaders will continue, we are going to see some losing position from the bulls of the market, because everyone expects the leaders to intervene, and if they will not, investors will give up and say, you know what, you are not serious about holding your hints, making the actions, we are taking the money back. And that's what could cause also the yen pairs, also the other the indices to make dive to the downside. So in terms of dollar yen, what did we have? We had kind of triple cycle here. I don't like such triple cycles, but in reality this is kind of triple cycle. We had kind of a bullish divergence. Is it beautiful divergence? Well, no, but it's still divergence. Doesn't matter how we turn it around, right? Technically, this one could drop even lower. Even lower. Would it? Many things will depend on the fundamental right now. We had false breaks, right? On a daily chart, a weekly chart combo. We still need to close, of course, above this bottom around 105 plus in order to call it a false break. Currently we didn't. So every new high to be created, if it will be created, should be a reasonable sell opportunity. We had one false break right here, which I don't even count because this is not a correction from my point of view. What's going here, not even a correction. Why? Because if we take a look on the last candles rallies, right? That's the last two candles that created the last rally. This correction down even did not break below this last two candles range by creating a false break. So this is not really important. So the only false break that could be here now is if we, at the beginning of the week, close below this area, around 105, which we didn't yet. If it does, that's a very good positive sign for one false break. One more would be just ideal to start and look for sales. If we take a look on terms of cycles, then this cycle and this cycle take us exactly to the same place, 107 plus. That's why I say by ideal we will have one more push to the upside before we sell. Okay, not by ideal, I wouldn't actually deal with nothing here because it's obviously not clear. Daily MACD still on. Yeah, there is a potential bearish hidden, but MACD still keeps the rally, and we had a bullish divergence, so it could push it higher. And the 4-hour chart combo should be higher as well, technically. So I would not rush to do anything here right now, to be honest. Maybe even consider buy correction. If we get two waves, for example, maybe on the short term, try to go and make this buy. With all the expectations from Bank of Japan to take action, the bulls will not give up that fast. Okay, and once we will have the news from them, then we will probably know what to do. But there is one thing to remember when anything comes with Bank of Japan: they could surprise, not make it official by setting a date for the releasement. Yeah, they could just go and surprise, and we have to be very, very aware of that. By then, yen pairs, all the yen pairs should pretty much do the same. We were looking for zone of actions on the yen pairs last week. 103 up to 105 was our zone of action. We got a drop down by Friday, slightly higher. Euro yen also, we expected this drop down. We were looking first of all around 113, 115 for reversal. We did not have any bearish divergence or false break right there. We just here start to get first false break. So by ideal, once again, we should get something like that, and then we can discuss about sell opportunities. So on the short term, for me, it's still possible buy anywhere in between 115 zone down to the trend line zone, which is next to 113 approximately. So if we can get two waves down here, 1, 2, 3, 4, and bullish hidden divergence or any other divergence to form, we can talk about possible reversal to the upside. If not, I would not deal with that right now, because technically this pair has all the reasons to continue lower and meet anything like 100. The only question is where from, because currently there is not a good chance we will get one more rally higher towards 122 up to 125. It's doable. It's especially with all the expectations from the Central Bank of Japan. That's what we could face, and that's why one more long here could make sense. But I would be very, very, very careful with the yen pairs right now, to be honest. I don't think that's the best opportunities we can enjoy from. Dollar Canadian, guys, I don't really know, because we are still moving in a range. So doors are yet open for 135, 136, and the same time for a break below 128, retrace, and a drop down. Everything is doable with this pair right now. It's not readable, not classical, a lot of zigzags, a lot of range. I would be very careful by trading it. Indices, well guys, we are on historical highs. Is that over? Big chance for yes, big chance for no. Why? Because technically this 161.8 meets us very here, next to 2200. You remember these levels from a long time ago. Now if we measure this, it's building up a special cycle. False break would be just dreamy, of course. Weekly chart, potential divergence. Potential simply because it was not created, completed yet. Daily chart, we already have cycle meetings. So this is the first one, right? And this is the second one. And they meet pretty much next to the same zone here. Okay, that's the zone of 2200s, slightly below, of course, it's acceptable. So on last Friday we got a sudden drop, but that's all because of the uncertain things happen in Turkey. How it's going to affect, of course, we need to give the market its time before it tells us what's going to happen exactly. But from my point of view, it is the zone wanted to start a classical investment. Okay, next to 2200. It doesn't mean every 2 points or 10 points or 20 points you need to attack. No. Just look for your entry one. That's more than enough on all this zone and let it go. But investment on such things and occasions could be risky, especially if there will be interventions, because then it's time to cash out, accept a loss, or hedge, or switch sides, or whatever it is, but just not fighting the market. So be very able to listen to the market, what it tells. But from my point of view, currently we should be building up the position for a possible reversal. And if we can get on next coming week something like a false breaks, that would be just an amazing opportunity for a movement. And I would be starting to look for this entire cycle possible reversal. First of all, that could be a really good opportunity. And gold and silver, well, not clear yet. We are moving in a range. Last week we said, if you remember guys, that this is what we might get, right? 1 2 1 2, something like that. Now it was going in this direction until again the uncertainty from Turkey happened on Friday. Right now we have no idea how it's going to affect the market in reality. Same with gold. So I wouldn't rush to trade it or touch it. So let's wait for the week to start, and we will find our opportunities to enjoy from better setups. So that would be all for today, friends. Now I promised about the statistical view. There are few to follow mainly. One of them is the Mr. S&P, which create a lot of pressure on the last 1.5 up to 2 weeks of every month. See that? 17 and 19. We are now on 17th, right? The week is about to start. 17, 19th, very powerful days for tops. Okay, the next important day is 2022. That's pretty much the same family. This is the week, which a lot of times S&P does create tops. That's one of them to follow. Okay, and another one, of course, is where is that? Oh, the euro dollar, but for the bottoms. I can say that 23 up to 26, 28 are possible dates for bottoms. So if we can get one more week for bottoms, the next one could be the time of the reversals. So keep that in mind. That's the two main interesting statistical things we have on the daily cycles. That's all. Keep that in mind, guys, and pay attention. That's pretty much what I wanted to show you. Thank you very much for your time watching this video. I hope you enjoyed. Don't forget to share your like. If you liked it, click the like button. It gives the motivation on my side to keep creating these things for you. Feel free to share with everyone who you believe can enjoy from it this or other way. If you have any question or any feedback or anything you would like to say, feel free to do that on the comments. I will reply as soon as I can. And I wish you a wonderful trading week. By the way, I'm asked a lot about that currently, about all the divergence things. And I want to pay your attention, guys, to the Divergence University. This is exactly the place where you can get all the same things I do to understand how the divergence works. Regular, continuing, hidden in both directions, the combination in between, how we add the Bollinger Bands ideas into this kind of trading, how we add the reversals, the continuation of trend line, the extremes, and many other filters we apply in, how all this world actually works. And the best part, that you can get the entire course, which is also for beginners and for advanced, for free. And the idea is get it from your broker. They sponsor it for you. So what you need in order to do that, go to my blog, Vladimir Ribakov. .com. This is the one. Go to get my products from your broker. Okay, and here you have the list how to do that exactly, and what are the brokers. Currently we have 3 on our list. On future we will work to add more. Hot Forex, AvaTrade, and CM Trading. That's the ones. And that's all. That's how you can get this entire thing for free. And the reason is for free. I said it not once. Brokers are ready to sponsor it. I don't need any penny from you guys. That's not my goal on this course. My idea here is very simple. If you trade it successfully, then the broker would sponsor it on my side, for you, of course, by commissions. So yeah, I'm kind of taking a risk here, because I'm not saying nothing right now. I rely on your success as traders, and that's all. And that's why I take this risk, because I know the quality of the things I give you. I know the quality of the things I bring to you in my product, and I believe that could be beneficial for you, of course, and you can be successful by using this thing. This is exactly why you can get them this way. So that's all for this week, friends. Thank you once again for your time watching this video. I'll see you on the daily videos, those of you who are in, of course, and follow and watch. And I wish you all the best, and once again my prayers to everyone for safe days. So let's all wish for better, safer days worldwide, without all the craziness that we see lately. Thank you for your time. Yours, Vladimir Ribakov.